Hey everyone, welcome back to Corporate Decoder, the place where we break down massive corporate fillings and try not to get lost in the accounting jargon. So today, we are diving deep into a really thick filing from Voya Separate Portfolios. Trust a company that manages investment funds, a lot of them. In fact, this filing is mostly a collection of semi-annual shareholder report for dozens of different Voya target retirement funds and some other funds too. It is a ton of information, and while it looks dense, there is a story here about how these funds are performing what they own and how much it costs you to invest in them. Think of it like a financial autopsy of these retirement funds, and we are here to find out if they are healthy or if something is a little off. Alright, before we get too lost in the weeds, let's get the basic facts straight. Voya Separate Portfolios. Trust is the main entity and their Registered Investment Company Act file. Number is 811-2025. The reporting period we are looking at is from the 1st of June 2025 to the 30th of November 2025, so roughly the last half of last year. It is a S. Semi-annual report, which means it is not as detailed as the big annual reports, but it still gives us a good snapshot of where things stand. Now, for the part everyone wants to know, the costs, we are going to look at a hypothetical $10,000 investment here, is what jumps out immediately for the Voya target. In retirement fund class of shares, for example, you would have paid about $19 in costs over those 6 months. That comes out to about 0.36% annualized. This might sound small, but over years these fees add up. For the class I shares of the same fund, you would have paid a measly $7. That is 0.13% annualized. Class R shares cost you $32 or 0.61%, and class R6, which is usually the cheapest, came in at about $5 or 0.10% annualized. So you can see there is a big difference in cost depending on the share class, and that is a key takeaway here. The cost of investing can vary wildly even within the same fund family. For the Voya target in retirement fund, the total net assets were a hefty $261,933,758. That is a lot of money invested. But here is an interesting point. The number of portfolio holdings was just 13. That means these funds are not highly diversified. They are concentrated in a few key investments. And that means if one of those investments goes south, it could really impact the whole fund. So what are these funds actually invested in? Let's look at the top holdings for the Voya target in retirement fund class A. We see the Voya Intermediate Bond Fund class R6 is the biggest piece at 24.4%. Then comes the Fidelity 500 Index Fund at 21.1%, and the iShares Core US Aggregate Bond ETF at 14.2%. Notice a pattern here. A lot of these top holdings are other Voya funds or broadly diverse. IFID ETFs. This fund of funds approach is common, especially for target date funds. It is like building with pre-made blocks. They rely on other managers and other funds to do the heavy lifting. Looking at the asset weightings, this particular fund is split with 35.3% in equity and a large chunk, 64.5%, in fixed income. This tells us it is a relatively conservative allocation, overall focused more on bonds than stocks. This makes sense for an retirement fund where capital preservation might be more important than aggressive growth. Now let's examine the target asset allocations for this fund. The biggest component here is US large blend at 20.5%. This basically means large US company stocks, like those in the S&P 500. Then we see international stocks at 11.5%, and core fixed income at a substantial 39%. This breakdown reinforces the idea that the fund is aiming for a balanced approach, not too aggressive, but with some room for growth through equities. Let's shift gears to the Voya Target Retirement 2030 Fund class. A shares here incurred costs of $19 for a $10,000 investment, which is 0.36% annualized. The total net assets for this fund were $196,925,810, a bit smaller than the in-retirement fund, but still significant. The top holdings for the 2030 fund show a similar trend, though slightly different. The Fidelity 500 Index Fund takes the lead at 35%, followed by the Voya Intermediate Bond Fund class R6 at 18.1%, and the iShares Core US Aggregate Bond ETF at 11.4%. This fund appears to have a stronger allocation towards us large cap stocks, which is TIE. Pickle for a target date fund that is still a few years out from its target retirement year. Interestingly, the asset weighting for the 2030 fund is heavily skewed towards equity at 60.7%, with only 39.1% in fixed income. This is a more aggressive stance than the in-retirement fund, and as you would expect for a fund targeting retirement much further out in time. The breakdown of target asset allocations here confirms that equity tilt us large blend makes up 34.5%, followed by international at 17%. And core fixed income at 30%, this shows a clear strategy to capture more growth potential as the retirement date is further away. Moving on to the Voya Target Retirement 2040 Fund class. A shares here had costs of $20 for that $10,000 investment, resulting in an annualized cost of 0.37%. The total net assets for this fund stand at $147,270,141. The top holdings for the 2040 fund paint a picture of increasing equity exposure Fidelity 500 index fund at a significant 46.7%, Vanguard FTSE Developed Markets ETF at 14.8%, and Voya Intermediate Bond Fund Class R6 at 10.8%, this trend of higher equity allocation is consistent with the fund's later target. Retirement date. The asset weightings here are striking with a massive 82.3% in equity and only 17.5% in fixed income. This fund is actively seeking growth and is geared towards investors who are still decades away from retirement. Looking at the target asset allocations, us large blend accounts for 46.5% international stocks are also a large component at 24%, reflecting a global equity focused core fixed income, is down to 13%, showing a clear strategic shift towards higher growth potential assets as the retirement horizon gets longer. Across all these target retirement funds, there is a recurring theme. They are essentially built using other Voya funds and popular ETFs. Think of it as Voya creating pre-made portfolios for different retirement timelines. They pick the building blocks, the bond funds, the equity ETFs, the index funds, and put them together based on how far away your target retirement date is. It is a convenient way for investors to get a diversified portfolio without having to pick individual stocks or bonds themselves, and the costs vary by class because different classes have different sales charges and shareholder service fees, which is pretty standard. Now let's look at the Voya Target Retirement 2065 fund class of shares here. Cost $20 for a $10,000 investment. That is 0.37% annually. Total net assets were $26,204,174. This is a much smaller fund than some of the others we've seen. Top holdings include Fidelity 500 Index Fund at 54.3%, Vanguard FTSE Developed Markets ETF at 16.2%, and Voya Multi-Manager International Equity Fund class. I at 9.8%. As you can see, the equity allocation continues to climb as the target retirement date gets pushed further out. The asset weighting for the 2065 fund is extremely heavy on equity at 96.3%, with only 3.4% in fixed income. This represents a very growth-oriented strategy designed for investors with a very long time horizon. The target asset allocation reflects this heavy equity, focus US large blend at 54.5%, international stocks at 27%, and core fixed income at just 2.5%. This fund is essentially betting on the long-term growth of the stock market. Finally, we have the Voya Target Retirement 2070 fund class of shares in this fund. Incurred cost of $12 for a $10,000 investment, which is 0.36%. Annualized, this fund is brand new. Its operations started on the 8th of August 2025. So this report only covers a few months. Total net assets are $3,424,786, very small compared to the others due to its recent launch. Given its newness and target audience, the top holdings are expectedly similar. Fidelity 500 Index Fund at 54.5%, Vanguard FTSE Developed Markets ETF at 16.9%, and Voya Multi-Manager International Equity Fund class. I at 9.8%. The asset allocation shows a nearly pure equity play at 96.4%, with fixed income at a minimal 3.6%. This aligns with its very long-term investment horizon. The target allocation mirrors this, with 54.5% in US large blend and 27% international stocks. This is about as aggressive as you can get for a target date fund, which is appropriate for a 2070 retirement target. Now let's look at the financials themselves across the board for these various target retirement funds. We see substantial net assets for most of the larger funds. For example, Voya Target in Retirement Fund has net assets of $261,933,758. The Voya Target Retirement 2045 Fund is also quite large, with $227,469,155 in net assets. This tells us these funds are popular and a lot of people are entrusting their retirement savings to them. Looking at the statements of operations for the Retirement Fund for the 6 months ending the 30th of November 2025, net investment income was $3,016,927. This is the income generated from the fund's investments after expenses. Now, the interesting part, net realized and unrealized gains on investments were a whopping $11,532,997. This means the investment within the fund grew significantly in value during this period. When we compare the distributions from operations for the year ended May 31, 2025 to the 6 months ended the 30th of November 2025, we see a big jump in the increase in net assets resulting from operations from 4,781,230 FODs to $14,549,924. In just 6 months, this indicates a strong positive performance in the latter half of last year for this fund. The financial highlights tables give us a per share look at performance for Voya Target in retirement fund class. A. The net asset value. Per share started at $10.85 at the beginning of the period and ended at $11.51. This is a positive growth represented by a total return of 8.09%. For the period, this shows that despite the costs associated with investing, the fund's underlying assets grew in value. This is a critical number to consider. The cost of these investments for us federal income tax purposes was $247,676,064. That is the original amount paid for all these underlying assets, and the net unrealized appreciation, which is the current value beyond the original cost, was $13,793,731. This means the fund has appreciated significantly in value from when it was purchased. Finally, let's touch upon the board's discussions regarding the renewal of these management and sub advisory contracts. They essentially reviewed the performance fees and services provided by Voya Investments, LLC, and Voya Investment Management Company, LLC. They looked at how these funds performed against their peers and market benchmarks, and whether the fees were fair considering the services rendered. This is a standard part of governance for these funds, ensuring that management is acting in the best interest of shareholders. So what is the big picture here? Voya's target retirement funds are built using a funds approach, meaning they invest in other Voya funds and ETFs. The costs vary by share class, so it is crucial to pick the right one for you. The performance overall seems decent with positive total returns for most classes, and the board actively reviews these arrangements to ensure they are fair and beneficial for investors. The big takeaway is always to check the specific share class costs and performance when choosing a fund like this, because even small differences in fees can add up significantly over your investing lifetime. And that wraps up our deep dive into these Voya fund filings. What do you think about the funds approach and the different cost structures for each share class? Would you invest in these funds? Leave your thoughts in the comments below. If you found this breakdown helpful, please hit that like button and subscribe to Corporate Decoder for more deconstructions of financial documents like this. And hey, if you want to connect with other finance enthusiasts and get more behind the scenes insights, join our Discord community linked in the description below. We can't wait to see you there. Thanks for watching, and we will see you in the next video.